I think like most of us, poor people live their lives through a lot of different kinds of financial connections. And payments are really the connective tissue that hold those financial transactions together. And I think unless we can figure out ways to help poor people transact in a way that's profitable for them and profitable for providers, we're really not going to see large-scale financial inclusion take place. Now, one of the most exciting things that's going on for us is the ability of mobile money to reach down into really poor households. And so right now in a country like Tanzania, 47% of households have a mobile money user. And the exciting bit of that is not so much, okay, there's one person in the household who's sending money to friends, but it might open up all kinds of innovations that before were previously unavailable. So let's think about savings, right? Because we know savings have a big impact on poor people. Well, it's really hard to save, and poor people have to take a lot of self-control, and we expect a lot of self-discipline out of them if they're going to be able to save. If I could actually begin to transact digitally, and I had defaulted into commitments accounts and savings accounts for school fees or whatever the mental maps are that work for me, I think we could see large-scale inclusion that actually has a big developmental impact. And we know that the empirical evidence around these pieces work. So we know commitment accounts work, but poor people just don't have a way to get those commitments account. We know that giving smallholder farmers a chance to save for next year's harvest has an increase on both disposable income and investment. We know that paying for insurance actually helps in a risky situation. So it's really the fact that payments both enable lots of financial services that previously just take too much self-control, but secondarily allows us to begin to transact in sachet-sized transactions, which fits the way poor people live. I mean, I think in some ways poor people adopt technology that works for them. So of the 2.5 billion people that are left out of financial access, 1.7 billion of them have access to a mobile handset. So that didn't take a lot of financial or communications education for them to adopt. So they adopt things that work for them. I think there is a role for microfinance and a role for savings-led groups and other kinds of mechanisms that reach the very poor, because these relationships are still really important. And I don't think anyone's talking about becoming to have a nameless, faceless, digital financial service transaction that doesn't have any connection into real people. So I think microfinance has a real role to play in building those community-based relationships and helping to make sure infrastructure actually is inclusive. And thirdly, actually thinking about reaching some of the most vulnerable people in the world who otherwise wouldn't be reached. The Gates Foundation, along with McKinsey and others, just did a big study of payments. And one of the things that showed out is how organizations and providers make money. And so with microfinance, it's about credit. Traditional banks are about balances and intermediation. And mobile phone companies, it's about churn reduction and voice. And as we look at these adjacent revenue streams, it becomes clear that maybe real financial inclusion that's going to bring another billion people into the system is going to be about partnerships where different kinds of providers come together and offer services across digital platforms that fit what they know how to do. And so that may be payments in the mobile money space, that may be intermediation where banks are able to offer services across these kinds of platforms, and it could be that down to rural credit and to savings groups, microfinance organizations have a huge role to play in bringing in inclusive groups and other organizations into these platforms. I think that I probably don't have my numbers right, but approximately 600 million of the 2.5 billion excluded are smallholder farmers. And I just can't think of a more transformative thing microfinance could do than to figure out how they offer financial services to those folks. And there have been a lot of things that have tried. There have been government programs, there have been downscaling of banks, there's been de-risking of players in the market through subsidized credit, and none of those have really worked. And I think it's time for microfinance to really innovate of how they would reach this group. And I think the impact of that would be really substantial at the household level. The foundation really runs on the idea that all lives have equal value, but all lives don't have equal opportunity. In the overall development budget, we're a small piece, right? So the governmental budgets, both at the bilateral and multilateral, as well as the host country governments, are substantially larger than what we do. So we try and pick out places where we think we can be catalytic. And some of that is the upstream innovation. How do we bring new business models, new technology into these communities? And what can we do, because maybe it's money that other people aren't able to spend or want to spend, but are there some upstream innovations where we can take a long-term view? So we do those things. Our goal is to work with the public sector, to work with the private sector in deep partnerships where we get to play a unique role at the upstream level, at the data level, and at the crowding in level that we hope can leverage some of the resources that other organizations and bilaterals and multilaterals can bring to it.